Today's earnings gave us a stark divide. We have hardware makers banking real cash just to physically run AI, a software giant admitting its huge new AI pipeline hasn't generated a single dollar, and retailers fundamentally rewriting their price tags based on a Supreme Court ruling. Welcome to the Daily Brief for Thursday, May 28th.
Today really comes down to physical execution versus theoretical upside. We tracked DELL, OKTA, Costco, and Dollar Tree, and the headline profits mostly looked fine, but the underlying business reality is totally split.
Let's start with that physical side. DELL reported a surprisingly heavy junk for their traditional servers. Not GPUs, just regular legacy CPU servers.
Up roughly 92% year over year. And the mechanism there is what matters. The tech shift toward autonomous AI agents is accelerating, but to execute multi-step actions, an AI agent actually needs standard sequential logic.
Which means the shiny new bots need old-school hardware just to function.
Exactly. They need a standard logic harness. So Dell is booking billions in actual AI hardware revenue from that physical bottleneck right now.
Meanwhile, on the software side, OKTA is seeing incredible demand to manage those exact same bots on corporate networks. Their CEO said the AI agent pipeline is bigger than they have ever seen.
Yeah, but then he explicitly admitted that none of those agents contributed materially to Q1 revenue.
That is the gap right there. Hardware gets paid today.
Hardware gets cash flow and software gets waitlists. The market has been treating SaaS pipelines like booked revenue, but that grace period is probably closing soon.
Okay, so let's shift to the physical retail side because visibility was the main story for Costco and Dollar Tree today, but it was driven entirely by a legal quirk.
Right, the Supreme Court decision back in February on international tariffs. That IEPA ruling structurally changed retail cost dynamics.
It did, and these two are playing it so differently. Costco got a historic federal tariff refund from that decision, and rather than pocketing it to pad their margins, they are aggressively using it to cut member prices at the register.
They're weaponizing the refund to suffocate competitors, which works when you have warehouse scale, but Dollar Tree spent their call warning about severe cost chaos this coming July, terrified that temporary replacement tariffs will kick in right before the holiday inventory buildup.
Wait, I want to jump back really quickly because OKTA's bottom line looked fantastic this morning. If they aren't monetizing the AI pipeline yet, how is their headline profit so clean?
The profit beat looks like great operating leverage, but it's really just a one-time structural tax benefit.
Right.
The new One Big Beautiful Bill Act legally dropped their tax rate from 26 down to 21. That headline profit is heavily flattered by a paper tax cut,
which completely masks the delayed reality of their software rollout. That is exactly the kind of context we need. The individual episodes sitting in the feed have the complete details on how management teams are rewiring their pricing and infrastructure on the ground. Catch you tomorrow.